So the first time I've looked at the charts today. I'm just going to have a look at Bitcoin to begin with, as I do. And I'm going to test my sound out as well, because yesterday I recorded for 20 minutes. Wasn't on mute. Test this. Yeah. And I've also added a noise filter to get rid of the white noise, the background noise, because I noticed on my videos that there was a little bit of a shh, like a white noise. So yeah, let me know if that's working. If it's not, then let me know. Well, what is it that I want? Yeah, Bitcoin. Well, this was my charting analysis from yesterday. It didn't take a long because it didn't come into my level, which is what I was interested in. And I think that's the best way to approach your trades. You make a plan. If the price comes to execute your plan, then you execute your plan. It doesn't, the price doesn't come to do what you want to do to the levels that you're interested in, then you don't do it. You don't chase the price looking for a plan. You make a plan, and if the price comes into the format of what you're envisioning, that's when you take the trade, because you've planned it. So it's really important that if you do make a plan, if it doesn't happen, it's no big deal. You just make a new plan. That's the best thing you can do. We have broken out of this upper part of this triangle. There is a little bit of increase in volume, not crazy, but we have actually managed to almost, yeah, we've closed higher. If you look there, we've closed higher for 1 hour time. When I have a look at the daily chart, which is what I like to do first, and obviously today we have a week close as well, so I'm going to have a look at the weekly time frame also, try and figure out what it's telling us. Well, this is a wide-bodied doji, potentially with a close above the previous week high. See that? Potentially. That is your and we've also gone down to take the wick, to take the we've taken the liquidity from that week low, this week low, and we've failed to take the liquidity from this week. We've actually managed to take liquidity from 2 previous week lows and closing potentially higher. So that's not bad. That looks quite bullish. It's quite bullish, but we have to see how the week closes today, because we're still closing potentially within the range. We have to see how it closes. I think if we're able to close above this previous week high, think that's quite strong. I would expect continuation, especially because of this wick that we've created on top. We've taken all of the liquidity and we're still closing above previous levels in the highs. I think that's this would be quite a bullish candle, and you would expect some kind of continuation, even if it means just going up to the top of this wick, just going up to this to take the liquidity, top of this wick here. So annoying. Why is charts save that? Yeah, so you look at this 3-day candle, these 3-day candles, you'll see that this red candle, this red 3-day candle, we closed last night above the open. The open is here. So we reversed the volume of these two red candles. The volume's been completely reversed as far as price is concerned. This whole structure here is a full reversal pattern on the 3-day time frame, and it's looking very bullish. It's looking super bullish. This 3-day doji, we're still in the range of that 3-day doji. You can see the price is closing within the wick, of the upper wick. So usually when the price is in the upper part of a wick, it's consolidating, it's quite bullish. If the price was in the lower part of this wick, that would be quite bearish. So at the moment, the top part of the wick is quite bullish, and looks like we're still going up. It looks like we're still going up. I don't see any signs of weakness, to be honest with you. I think potentially last 2 days ago, I mean, yesterday should have been, see this this green kind of doji, the long tail. That was the opportunity for the shorts to come in and push the price down. And if you would have ended up with a long red candle closing down to here, then you'd be looking at a reversal, the beginning of a reversal formation to go down. Because usually with these wicks, it suggests that the liquidity has been taken, but actually it only managed to get halfway to the body of this white green candle, and it closed above previous level. So naturally today this has gone, see, it's gone down again. I think the problem is now that you aren't really getting people selling, and I think to move the price up you have to market long, because otherwise the other way to do it would be to squeeze long, squeeze up. We're nowhere near squeezing, so you would expect the invalidation for the shorts to be up there. So unless we can get the price up there to squeeze up, we may just go sideways for a little bit. And that's not bearish at all, that's quite bullish. Consolidating in the highs is quite bullish. Consolidating in the highs underneath key resistance is bullish. And if you look at this kind of you look at these lows, you can see that these lows are getting higher. So the next time there's another low, that's when we're going to get an injection of volume to take the price up again. I think at the moment, maybe we're just waiting to kind of go down to take more liquidity to go back up, rather than just go back. It's usually how it works. You get people selling into the lows, price reverses, because that's where people long the lower part range, rather than just kind of buy willy-nilly. But I think when I look at the formation now, it's quite bullish. As long as we close above the previous week high, I would expect continuation next week. I don't expect a reversal. We were able to close there. And monthly time frame, look. Like we've come all the way down to back test this channel. I don't know if you have this channel. It's quite, see if you can see that. It's quite a narrow channel when you look at it on the 3-day daily. There's loads of channels that you can draw. I like this one, but I mean there's many, and it's very subjective. The other thing is you can't really trade channels. You're just looking for reversals at the key points, but often you have to coincide that with other levels such as support and resistance flips, and see fib pulls. I don't really think, I mean, it's very difficult to trade Bitcoin because look at it, we're really in a tight range. Like, I mean, it's still 2% up, and we get tighter, 1%, and I don't know how you could trade that. It's not very easy to trade this because we're just getting tighter and tighter. So actually, what I think would be better is altcoins. I think when Bitcoin starts to show strength and doesn't go anywhere, then have a look at altcoins. Ideally for altcoins, we want ETH BTC to show strength, and we're not getting that. So I think ETH BTC is still kind of bleeding into Bitcoin, and maybe we have to just go down, take this liquidity, and then maybe then the altcoins start rallying a bit. But I do think that there's a lot of altcoins in good places for spot buy right now. So you start looking at these altcoins, you've got like some capital aside for spot. I think a lot of these altcoins are showing to be in good positions or good places. Like today I took a trade on Objective. It's actually a trade, it's not a spot buy. If you look at Injective, for example, you see on the daily time frame we've been consolidating in this range since the 19th of December. This is quite bullish. You have this kind of this bullish candle here. It's a red candle, but it closed higher than the previous level. It took liquidity. It's actually, formation is looking quite bullish. So you know, I think we're in a good place for kind of spot accumulation across the board on a lot of tokens. And I think once Bitcoin is able to break up finally, then I think you'd be looking like, I mean, if we could get Bitcoin can finally get above this kind of this midpoint of this channel that I have drawn out, back test for support, then basically that's a really strong place to buy. Then you're buying altcoins when Bitcoin back testing support, and it's the best time to buy altcoins when Bitcoin support. That's something to consider. If this happens, or if this plays out over the next few days, and it could, because of this kind of ETF stuff, get like a back test into this mid channel previous high, get some kind of back test, and we're confirming acceptance into a new range, then I think it might be good. Alts will start to pump again, and then you would expect something like BTCD to go down again. So you see here, BTCD, I've got this kind of really prolonged trend line, very subjective, but it's roughly accurate. You'd kind of tweak it a little bit. It doesn't really matter. I'm not trading this chart. It's just a guide, and you can see that we broke down into this the brushes. Can't even remember why I drew them, but for some reason look at it. Anyway, and you see how the price has come all the way back. The strength of BTC come back. Now we're coming into a key level for reversal. You see this? We're coming to back test this trend line, but not just that. We're also coming to, you know, previous resistance levels. So we're into resistance now on BTCD, and I often say that a sign of strength would be acceptance above a previous trend line. So this is a real sign of strength. If this was a real sign of strength, but I'm not seeing that yet. I would actually prefer if the price did go up and then come back and show me that we're back on this trend line. But if we get that kind of behavior, then I would think to myself, okay, no, actually BTCD is showing strength again. Better to be in Bitcoin, because that's a sign of strength to be able to the V-shaped recovery on BTCD, plus its acceptance back over previous trend line and over previous kind of resistance lines. And you would expect these highs to act. See, there's like a resistance. We're into resistance now. We get back above, back test. You need to see the back test, because if you don't see the back test, you don't know if that's confirmed or not. If the price goes up in a straight line and there's a back test, you're not sure if this line is respected. So if it does come down, it might just ignore it. But when you get that back test, then you know, okay, no, actually this line is good. And then that helps you to determine your invalidation, because then you have an invalidation. Previous low, plus you have a trend line breaks, then you know that actually idea has been invalidated. It gives you you won't know that unless you get that back test. That's why it's important for a back test for confirmation before you change your bias like that. So at the moment I'm still thinking we're coming into resistance. It's, you know, we may kind of fall again. That might coincide with other things that are happening in the market, and maybe it's got something to do also BTC, because I am still looking for an SFP of this low, looking for that trade. I'm looking for that ETH BTC to show me that it's exhausted and now the price is looking to reverse. And if it begins to behave the way I want it to behave, then the altcoins are going to begin to really pump, because then ETH BTC will pump. But usually that will coincide with BTC itself getting into another range, higher range. Hopefully, if that works, if it coincides with this kind of behavior, then you could potentially see maybe 1 or 2 months of altcoins where BTC is just kind of in this higher range. I don't know how it's going to behave, but that's best case scenario for all of us, because then we can have fun with the altcoins while BTC basically goes nowhere in the higher range, accumulates a range, where the price just goes up and down in a range. And if that coincides with ETF news, then that's great. Obviously, if for some reason that we don't know, ETF is somehow delayed, then I think you're just gonna expect people to close their positions. So therefore, you could potentially see. I don't think it's gonna happen. Who knows? If that was to happen, then this is gonna get we'll probably lose this. Be a serious sign of weakness if that happens. Then we'll have to see what happens afterwards. We have to see whether just a liquidity grab to reclaim the bottom of this channel, or whether there's not enough liquidity or interest where it creates resistance, and then it's actually looking to correct much further. So then we have to then determine. So I'm not in a Bitcoin trade right now. Just watching Bitcoin, and I'm just seeing Bitcoin showing strength but going nowhere. Also had these trend lines which clearly broke. It's not a crazy break, to be honest with you, and I think part of the reason why is because I think there's a lot of anticipation for this ETF. People are waiting to see what happens with the ETF. So therefore, we have broken our line. That's good news. But at the moment, there's no news. Now, in terms of my BTC trade, I tell you what, I'm eyeing out for a good trade now. It's still this bottom trend line, but if we can catch that on the backtest of this broken trend line with a liquidity grab from these levels here, then I would really love to take a long here. I would wait for the swing failure, and this would coincide with perfectly coincide with 10 p.m. tonight. That's UK time. Don't know what time you are, but it can be like at midnight. It's still roughly in the same vicinity. If we were to go down, take liquidity from these lows, kind of back test this lower trend line, back test this broken trend line, I think that would be a really good long. I would take the SFP of this of any one of these lows, because I like the confluence of trend lines here. That was to happen, and then obviously you can see if there's any more confluence, which there is. See that from this high to this pivot low here, you're also coming into a golden pocket, a local kind of price action. So there's a bunch of confluence here, and I think I'll be looking for that kind of price action to long, and maybe that could happen at the week open tonight. So I'm kind of keeping an eye on the charts in the first hour. Tomorrow's, maybe we get a pullback, a little bit of a liquidity grab for the price to actually start. Then it will. That would be nice, you know. I would really like that trade. And if it doesn't come, again, this is the thing. This is my trade now. I've just made this plan now in front of you. If this doesn't happen, if for some reason the price just goes up, I'm not going to take that trade long, because I haven't planned for that. I think it's really important that you bear that in mind. you're looking at making trade plans and it doesn't come to fruition the way you envisioned it, it doesn't matter. The idea is that if the price comes at a specific time to a specific level and behaves a specific way, then you take the trade and you have your invalidation, and you would risk your X% of your portfolio. It's usually 1%, but it could be less or it could be more depending on your risk tolerance and depending on how certain you are in the trade or how confident you are in the trade. Some people like to ladder in. Some people like to go all in. It's not my. But I think the safest play for most traders who are relatively inexperienced, new, is to just use trade on spot and not use derivatives. So I think I'm looking for that. I'm not looking for any shorts unless I see weakness at the highs. Unless I see weakness. And the weakness would have to be a prolonged weakness. I would have to look at the price action first to determine that. I'm not like planning a short these levels anymore. I'd be more interested in much higher prices. But I think if we can show strength and get above these previous high, get above this channel, I'm still looking to long actually. I'm not looking to short. And if then I'll be kind of analyzing the high prices to see what there is. I'm not really making the plan because I want to see kind of higher time frame candles form before I kind of decide I want to short, because usually you're not going to get like a short. You don't need to worry about this kind of action. That's it. That's the high. The high isn't going to form like that. Usually, if the price goes up and it'll range, there'll be a range, and then there'll be one liquidity take where you're able to short that whole range. So that will present itself once the range is formed. So you don't really have to preempt shorts and rush into shorts. You can allow the price to form a range first, and then you can plan a short if that's what you want to do. But it has to coincide with key levels. It can't just be in the middle of this kind of black abyss. I'm not really looking at that to see where the key levels are, but I think if we were to look at the time frame and look for key levels, well, there is one here. There's a swing failure right on this level here. Might be short, but you see the thing about this level here, you'd get a squeeze which takes the price up. So you'd have to see how the price reacts at that level. I think that's Bitcoin really. Have a look at total market cap as well, because I wanted to have a look at that. Now, I've got this channel drawn out from a while ago. I kind of like it. And so I've kept it. Want to draw it yourselves? That's fine. Basically, these highs, you see how these highs form a nice parallel line, trend line. You can take one, like, I mean, it's very subjective again. I think the way I drew this was that I first delete it, and I'll try and do it again. I can't remember. I think that's how I did it. But don't mess this up. I think I took this, kind of, I tried to line them up as best as possible. And then what I did was I moved this to see if I could get the midpoint match up against these lows here, see how that formed. What I had before was better. I really spent a lot of time trying to make that one line up, and I think that's how you like with these kind of like channels, you can actually do that. You can actually try and make it fit as best as possible to see, once you have the kind of the angle, then you can kind of maneuver it to see where you are. I mean, you could almost argue that we've just, see, it's very subjective. Is it down here? Is it up here? I like to get the midpoint connected too, and then I want like all three lines connect. The top one being resistance, the midpoint being both resistance and support, and obviously the bottom one as much as possible to be support. So I kind of did it like that, and if I go back to my previous one, if I can get it, for some reason I like this just basically lining up these highs from January the 23rd through to April the 14th. The midpoint, basically, it doesn't have to touch because it's more of a region, but it's kind of this low of March the 11th, really important, and it almost touches here on 2nd of January. And then you can see here clearly total market cap. So you have resistance all the way up here. You see when the price came underneath, it came up to form resistance there. This is clearly support. Here it was support until it wasn't, and then it was resistance here. It was support until it wasn't, and then finally we had this kind of strength that came kind of back into the channel. Once it came back in, you can see how these candles for a few days, they were like forming support before the price moved up. So it is quite subjective, and you can't really trade channels, but it does give you an idea of strength and weakness. That's why I find channels useful, because as long as we're in this kind of upward channel, we haven't lost the bottom part, then I still think we're strong. And if for some reason in the future we lose this channel, I think then we're starting to show weakness, you see. So we might still be in this kind of range, but the fact that we have lost this channel tells me that actually we're starting to show weakness, even though we're still in. Kind of, it gives you a clue about the future as long as we get there, be by February, or if we're able to like make our way up above this midpoint, then I'm going to be seeing that as strength. And then if we lose it again, then that would be weakness again. So I like to use these parallel channels to show me whether we're strong or whether we're price is showing weakness. And it just helps with the bias, but you have to coincide the idea of these channels with other things. You can't just go, oh, I'm going to trade, I'm going to blindly along the bottom of this channel. Usually when it comes to a bull market though, I think once you claim a significant channel like this, and again, the significance of the channel is subjective, because I've made this up, you know, let me hide it. It could be other channels. It could be other channels. I'm going to try and draw one now, see if anything lines up. Just making this up really. Just be this low to this low, maybe to the heights. Get rid of possibly, maybe to these lows here. The angles are quite subjective too. Is that the right angle? Is there a better angle? Get rid of Again, I'll come back to them. Could be. Maybe this angle is better. This does kind of line up here. This midpoint. See, this is actually quite a nice channel too. You see, so you've got potentially you have two very nice channels, with this being a little deviation. You can then, if you really want to, you can go and kind of line it up precisely and just get it to connect using the magnet tools. It's actual perfect. That's almost nice as well. Look, see, so you have support, lost, resistance, deviation, nothing, support, resistance, kind of ignored, resistance, back test to go up, then it kind of formed resistance and then support, support, lost. Not as good as the other one, I think. And if I was to kind of overlay both of them, the green one is obviously a much more kind of wider channel, whereas this one, this red one that I've got constrained, is a little bit more local to the price action that we're experiencing now. And then obviously in the future, like coming in April, you have a cross of these midpoints. See that? And that could correspond with previous kind of a previous line level there. So I mean, if we were to come up that time to that level, you would expect a little bit of resistance, you know, and this is, you coincide that with other things like look, I've got the point of control. So this is part of the reason why we're stuck here, because we're underneath the point of control. I think I just took this on this range here. See, there's a control there. This whole bull market. We're just underneath the point of control of the last bull market, and we're obviously above the value area low. I don't ever want to now that we're in this kind of value area low. And actually, if you see the value area low, I don't really want to lose that value area low on the total crypto market. Now that we're in that previous value area, I think it'd be very bearish to lose that range, previous range. I think in it, it wouldn't look healthy to lose that range. And then obviously we have this value area high here. Get to so actually, if you see now, we have a little bit of confluence. This kind of area that would have to land somewhere in beginning of April, March. Who knows what's going to happen? Could the price be up here? Actually, back test that area. Just don't know. Or could the price just go sideways to do that before it takes a dump to go? You know, like, we just don't know what's going to happen in terms of how this behaves. This is the total crypto market cap. And just to give you a situational awareness of where we are now, we are consolidating underneath a point of control. We've attempted to take it to 3 times on 3 separate days. I think what you want to see is another test, maybe third time, fourth time lucky to flip it. Once we get that, I think then you'd be looking for more of an increase in volume. Maybe then we're looking to take this crypto market cap to 2 trillion and getting up to the true. I think the 2 trillion mark is going to be significant stone for a lot of people. So, and a lot of people kind of trade kind of around numbers. So that might coincide with the hitting this dotted red channel that I've got, and it's clearly shown resistance in the past. We just have to see how it behaves. And I think a lot of people are like, well, do I trade that? No. But do you look for a reaction? Yes. Do you look for a reaction? If you start seeing a reaction, and then you can formulate a trade, because you can see that actually we're coming to resistance. So it's always good to wait for the reaction, and if you start seeing a reaction, then you can trade it. But if the price just goes and ignores it like it has in the past, see where it's ignored. Well, this midpoint, it actually hasn't. That's why I like it so much. It hasn't actually ignored it. I actually like this red channel. Even here, when it ignored it, it came to back test. So I really like this red channel. The green one is a lot more kind of made up. You see here how here, this green one that I have, even though it came up and it back tested here for support, and it went down here, it ignored it, and it was so bearish that it couldn't get back to it. So this is the problem. When you're expecting it to act as support, you have to wait for the reaction. You've got a reaction here, then you have an invalidation. You don't get a reaction, and you don't have an invalidation, and that's what you're always looking for, is an invalidation before you take a trade, to know when you are wrong. That's really important. So I think as far as I'm aware, we're on the crypto market, we're consolidating underneath the high time frame previous point of control. And then when I look at the formation of kind of candles, we're still in the range. We had this sell off here and we're still in the range. It's quite bullish actually. When you get such a big sell off, take liquidity and you're still trading in the range. It's quite bullish. And even though this is the whole thing looks like a reversal pattern, it's not, because it's like a failed reversal. So basically the bears are losing steam. And if I take it to a slightly higher time frame, put all these red candles, and all of this kind of bears are in control, bears are in control, bears are in control, bears are really in control. And look, the price is still in the highs. The bears have been in control for 12 days. This is 4 red 3-day candles, and still the price is in the highs. It's telling you something. And decreasing volume. It's telling you something. It's saying it's looking bullish. That's what it's saying. Bullish. Bears are in control, the price is still in the highs. That's bullish. And this forming this green weekly doji looks good, huh? Now, it doesn't mean the next week this can't form a red candle. But for the bears to prove themselves next week on the total market cap, bears need close underneath this weekly low. They need a close underneath this weekly low. So to form a red candle, big, gigantic red. You get a red candle, this whole structure then begins to look like a bearish reversal. And then the next candle has to be confirmation. Has to be confirmation of the structure. So you'd expect to at the very least, some kind of back test on this loss level to prove and a weekly close lower to prove that we've lost levels and this whole structure is confirmed, then we're probably going down. Because otherwise, sometimes what can happen is you get a close underneath this this green wick, and then it's actually a bear trap. So you need another close lower to confirm it. At the very least, underneath there, you need probably a red doji down here, maybe a close down here or somewhere, and then that would look really terrible for the bulls, because that would look like a full structural reversal. All of this green volume has been reversed, it's been taken out. Probably then be looking for lower prices if that was to happen. So I think the first thing the bears need to do now would be nice red candle underneath that. If you don't get a close underneath that green candle, then that's a bear trap, bullish. Get a red candle all the way down, closes there. The next week probably is going to be still above this lower. It's usually what happens. And the same can happen at the highs, like if next week we get bullish green candle that goes up like that and it doesn't get above the previous week high, then the next week could be a red candle that follows it, and that would look bearish then. Because the bulls haven't managed to close higher. That's what we want to do. And this green doji now that we're forming is the test. Dojis are indecision candles, but they're also tests. They're now the bears and the bulls have to prove themselves. This is what the bears need to defend. This is what the bulls need. And this whole green doji is your range. This is your range. To be honest with you, it is very possible that we still range here as far as total market is concerned. Very possible. But if we do kind of go higher for acceptance to a new level, you really want to do what you want to do now is you want to flip this top pick support, push up, test to confirm it as support to go up. You want that to be the SR flip of a new higher. That's what you want. But I think it's looking bullish now. I mean, this whole week. I mean, we have to see how the week closes. But it doesn't look bad. See weakness right now. It'll change. But I don't see it. And obviously on this monthly candle, that's a bullish expansive candle. We've come to 50% of this monthly body. Now we're trading back above the previous monthly close. So already in the first week or less than the first week, the price is above the previous monthly close. So you would expect that if we wanted continuation, that now the price is trading back above it. As soon as it starts going up again, then this monthly candle would start to form, start to take shape, look where it should or will by the end of the month. You look at the 3-month candle and you can start to see how candle is taking shape. Well, look, you have this crazy 3-month expansion, and look what's happened, and look what it looks like. To me, it looks like we've gone to back test this previous level that corresponds to this wick here, and we're only in week 1. So potentially we've already done our back test and this could go up. And we don't know how this 3-month candle is going to end, but it could end. If it's a continue. Look at the volume. Look at the volume. It's an increasing volume, and we're still here. So whatever happens, this next 3 months, we're going to have increase in volume. That's guaranteed. We're only in week 1, and we've got increasing volume. It's quite bullish, actually. The fact that we've gone to back test this previous level we're back above the previous month close, and we already have increasing volume. So this next candle, if it ends green, which I suspect it probably will, then it might end green with increasing volume. It's a bullish. And best case scenario is we close above this level, which is the true 2 trillion market cap with increasing. Well, we close above that, and effectively, you look at the whole of this total crypto market cap valuation. This is total. You've basically reversed the drop in the first, from the beginning of the 1st of April. You reversed that all of that volume has been reversed. So we're back. If we close above this previous level there, and this whole structure is a reversal pattern, reverse all of this red volume will be reversed. That is bullish. That's all of that. It's a higher time reversal pattern. This becomes your low, your invaluation. Crypto, that probably becomes the new low of crypto, is probably 270 billion, the new low. So you would never really expect price, the value on the market cap of crypto to go lower than that in the future. It does line up quite nicely with this previous quick high. For it. It's not softly. And then you have higher low. That would be a higher low, really. For a higher high, obviously sharp. Who knows how far. But I got stopped out and I was in a trade. That sucks. I hate that. So much for that. Oh, it was a good. I got stopped out well though, because the prices just shot down. So life of a trader. It was only a small amount. What else did I want to look at? No questions. I don't know if anyone's watching. Check. If anyone's watching, say hi. I wanted to chart something. Time. If there's any kind of sometimes I go on to maybe I should go back to D-Travel. I could be talking about travel all the I don't know. Just keep on It's a nice volume. This is on buy. Oh, look at that. Bitcoin. Basically all of the exchanges. The lowest one was mixed. It's coming 60,000 TRVL. 405,000. So basically someone at Gate just bought 405,000 market buy. Oh my god. Bitcoin 626,000. So that's like over 1 million in TRVL has just been bought right now. Changes. See Bybit. Lowest at 60. That's pretty good. That's quite exciting. See that? I always like it where people come in and buy this, because I wonder if they're watching my streams or looking at the Twitter. An hour ago, D-Travel made a tweet. Screen, change screens. We're tokenizing vacation rental bookings. More details releasing soon. Look at that. Pretty exciting. Tokenizing vacation rental. I don't know how it's gonna be. It's interesting. Massive Bitcoin harmonic targets. Coach Daniel Haddad. Really good at this.
For you guys, and I'm gonna start off with this massive harmonic that myself and the people in trading floor have been tracking. We've been trading this. I'm gonna show you really quickly just how successful this harmonic has been. So I shared this into the group essentially when we were coming up to make our first pivotal retrace since this move down. I was pretty much saying that I'm looking for, not necessarily trade up here, because it's a little bit uncertain with harmonics where the B length will exactly end, or if it will even be B length. So the most realistic way to trade a harmonic is to wait until that C leg is formed and the D leg. So this is not necessarily a trade, but we can look for a trade down here, and that's exactly what happened. And what's funny is I was tracking this harmonic on Bitstamp only, and Bitstamp.
Anyway, sometimes it's good to kind of look at other people's stuff, see what they're saying. Michael Van de Pop, I follow him. He said, personally expecting that will have a short term. See any proof of Bitcoin. No, they're going. Got a YouTube update. Yeah, I mean, he's mapped it out quite well. He's basically looking to take this high, come back to take liquidity. It's interesting seeing other people and seeing what they have to say. Pepe. Or that was more interesting. Yeah. Really have any insights, to be honest. We're just accumulating. There's obviously a lot of anticipation in TRVL. I think a lot of that's got to do with the proposals, the upcoming proposals. If I was to go look at their Telegram group, everyone should be on their Telegram. Participate. Telegram show you. I haven't really participated in some of the recent conversations. I think night tokens, saying James writes, night tokens function. It's all different. On-chain representation, almost like a receipt. The D-Travel collective product we're experimenting with right now and itself use case. There's a lot going on, and I think it's just we just have to see how it all comes together. I think because it's quite a new the idea of tokenization of vacation rental bookings. No one really knows whether it could take off or not. This is the new thing. Could this be the NFT moment? First NFT tokenization of vacation rental booking. Could there be a massive hype train that follows? You know, I don't know. It's hard to predict the future like that. I think a lot of like the NFT craze was based on trends and influencers and celebrities, and you're going to jump on board this. It's hard to imagine, but you never know. As Cynthia writes, one of the things we've been talking about internally is if you could influence the roadmap by staking a certain amount of travel stake period. Don't know what that means actually. If as an operator, if you could influence the roadmap, what roadmap? So to get things done faster or quicker, or I'm happy to influence, contribute anything I can from my personal side to great concept. We don't have exactly. Listing does some support questions and stuff. Anyway, there's a little bit of activity in this looks like a spam message. Alt seasons are on. All soul related tokens are up. Which one? should be deleted. These should all be deleted. This is all spam. Spam. Even Chairman Meow says that. Southern scamming. I'm surprised they haven't been deleted. It's obviously scam. Little bit of internal conversations. Since the travels infrastructure costs so much less than Airbnb, there should be cost savings up front already for travelers. However, we talked about the mechanisms to prioritize showing listeners on Sensei if they set their prices lower than on travelers. Just I mean, a lot of this stuff is kind of can be developed later. Like, I mean, we want the core stuff to be updated and brought in line, and all these kind of smaller things are for future conversations. I think it's amazing how we're talking about some things. Fundamentally, we're anticipating the big thing, which is the tokenomics updates. Thing, see Sensei, which is consumer facing search engine. You obviously have the service hub, and the wallet as a service is almost ready. I actually received an invitation to test it out. I haven't looked at it at time, but I will have a play around with it. I'm not allowed to share it, but I can comment, give my thoughts back to the team. Sure, it's good. Anyway, that's the so I got this follow this guy called Ape. He sent me this message. He sends a group of lows group. What he writes: list of weekly lows, good for low risk spot buys. He's listed a whole bunch of tokens. But he's obviously this guy is like a mega whale. He's obviously expecting something. Here he writes 44500, 42500 still key levels would be in a shitty range right now, but could last a while. Best wait for inspection. But considering we're close to 44500, correct. Price is closer to the level resistance, and you're obviously expecting the price to go through that level. I think that makes sense because this higher range, previous higher range, get back into that range. It's actually a very sign of strength. But I wouldn't mind if we went down like I described earlier. Take liquidity. It's my probably gonna end it. See how it goes until something work for. See what this travel on the weekly time frame is looking like. So I mean, the week hasn't ended yet. That's this bearish red candle from Gate. It was green. So look, on Gate it looks more bullish, but again, if this was bearish, then this next candle, this week's candle should be red. That would be the beginning of a reversal to go down, and we're not seeing that. So actually, I'm thinking right now, this is looking very bullish. Very bullish. This is looking ready to explode. The thing about what I'm looking at now is a slight increase in volume on all the exchanges. A slight increase in volume. These lows. Once we get out of these lows, volume will increase naturally, simply because, you know, some people are going to take profit, then you're going to get new entrants. You know, once we get above this kind of, once we really get up here, I think then certain people are going to start taking notice. You know, there's a lot of people who've sold their TRVL and they're just looking for a way to get back in, but they're not looking to accumulate. They want to catch the move. They want to participate in the move. They're just waiting for the move to happen. And the problem is that there's a lot of tokens out there which are moving or have moved or are still looking to move. And there's a lot more liquidity in those tokens, a lot more kind of hype. And so naturally they seem to move first, or they seem to move more. But I think what you have to bear in mind is that because of the illiquid nature of this token at these levels, it's not going to take much to move this really quite distance, you know. And I think once we get that FOMO train into gear, that's what's going to make this move, when people start to fear the fear of missing out. Because can you imagine what would happen if like where we are now, we're at 3 cents. Can you imagine what would happen if you wake up tomorrow and this is already trading at 16 cents, and then it's a high volume candle, like the volume of this candle pretty crazy, and then all of these people who've take profit, and you start to range here for a few weeks, 3 or 4 weeks, or 1 week, 1 week red candle, and you know already you're up 300 and almost 400%, 350%. It's just like that. I think a lot of people are going to then start to FOMO in once that happens. Especially if we literally skip a level. That's gonna, and then we hold a higher level. And then if we were to hold that higher level for another week, like for 3 weeks, so you are forming a little bit of a range, and that should be increasing volume, because obviously people who are going to be taking profit, if the price stays high, then the volume will increase, and then you're going to get a lot more interest into this chart once we make that high. That's what's going to happen. And a lot of people will start foaming in. Now, actually, technically, once you make a higher high, you still have to make a higher low. So, sure, it could potentially. That's why it would probably be better to just go up there, then come down before we go up, but without taking that liquidity. But we're not in that. Like, I mean, the thing is, like this, when there's no people aren't shorting this, so you're not expecting a squeeze. So it's almost irrelevant. Because usually there'd be a lot of shorts and there'd be a lot of short liquidations above that level, and so therefore it would be, if you were to able to get up there, you could squeeze up. We don't have that luxury with this token because there's no derivatives, it's just spot. So the price that takes this up is going to be genuine spot acquisitions. It's going to be real demand. I think that's obviously going to coincide with the tokenomics launch, but fundamentally it isn't just about a white paper that people are going to buy and acquire these tokens. It's with the functionality tokenomics, it's with the actual implementation of the new tokenomics, so that people can and do acquire and accumulate this token for actual use. And so that's really when we're going to get an injection of upwards pressure and upwards volume. Up till that point, everything is going to be, relatively speaking, speculative for the future. But it's only at the point where there is real demand, where there's actual demand, we're going to get volume come in, you know. And I think if they create a tokenomics package which adds that demand and they implement that immediately, then you're going to get people go, well, I need more TRVL, I need more TRVL, if there's demand for it. And so the question is, like, are people going to just buy this up based on speculative futures? Speculative futures. This is we still don't know. We still don't know that's enough. You know, we may like get one level up. It's possible. Are we going to get that rally that we want? The impulsive rally? It's going to take us to new highs. Like, if we could, like, the best case scenario would be to skip this next level, back test, and then go up, push to here, up to about 46 cents, all in one go. That would be I think that would be, for us, that would be the best case scenario, because then you'll have like a retrace down, and then we have this level of 12 or 14 cents to defend. And if we can lose the momentum down to go back up here, that would be the best case scenario for us. And I think then a lot of people, this would have been largely speculation, and then the onus would be to it would be for implementation as soon as possible, so that the real demand comes, the actual, you know. And obviously then a lot of people who might take profit at these levels. Like, I'm just imagining that, for me, that would be the best case scenario, without creating a structure which can fall back to the lows. In, you know, that's what we don't want. We don't want, I mean, if we were to go up there now, it'd be very likely that we just get a crazy sell-off and it wouldn't look good at all. If we went up to here, the higher you go, the more likely it is that we get a crazy sell-off. That's already a 14x, 13x. Would you get a crazy sell-off of a 13x? Maybe, you know, or would I think you would get some kind of sell-off, but then that's when you need the real demand to kick in. If this is if the first move is going to be a speculative move. The sensei isn't going to give us the demand either. Sensei is going to give us the audience. Sensei is going to give us the crowd. Sensei is going to make us visible to the world. That's what Sensei does, but it still doesn't create actual demand for TRVL. It's only real demand for TRVL that's going to bring in the volume, the real volume, and not the speculative volume, but the actual real volume, where people are going to take the token, lock it up, take it off these centralized exchanges or wherever they acquire it from, lock it up and stake it, and then there's going to be a demand for that. That's when the price is going to really increase, then not come back down. So I think we're possibly looking at this first wave. It's going to be mostly it's going to be very speculative envisioning. Now, I would love for it to go up to these higher levels, half 50 cents immediately, but then I would expect a nice pullback. And so I've got these levels marked out roughly, and based on fib retracements and fib, I can basically tell you roughly where, if we were to go up here, then the golden pocket would be right back down where we started, and I wouldn't want that. And that's basically what you could expect that to happen. You know, that could happen. I don't necessarily think I want that to happen. So in my mind, I'm thinking that's not where I want to end up. If we were to go higher, golden pocket is now above some kind of. Then the problem is if you come back down this level, it's going to perish. Even if you come back into the support, how easy is it going to be to get back up that level? It's a hard one. And I think you're going to have this problem all the way up. Ideally, you want this golden to land significantly. Higher you go, you can't do it. It doesn't work. The golden pocket come up this higher level, going up to $200. It's not going to work. So maybe we have to look at it slightly different. See what the full fib is. To that. This level. Get rid of these. We went up to this level here. 382 would bring us to here. 382. That would be bullish. And coming back to the 382 and forming support on the 382 would be bullish continuation. Yeah. We went up to this level here. 382, look, 382. We went up all the way here to 52 cents. And 382 would bring us perfectly 14 cents. See that? This line here. So you see how these levels really like are corresponding, and then that would be really bullish. And obviously if you went up 50 cents, these levels, so 15x from now. If we suddenly went up speculative to 50 cents and then defended 15 cents, that would be, that would probably be the best case scenario. That if that's your wave one, we create a wave, impulsive wave like that, we accumulate cents. But I've often said that 9 cents needs to be defended. But then if you defend 9 cents, then you're coming back under this level. Let me see where it would land if one of these fibs came to cents, 82 cents. And you're looking at a target of 22. And that would actually, your max. So this is the ADA path. I probably have to show you the ADA these days. Delete that. Yeah, you've got this kind of white channel that I've got. So it's easy to see. Red channel. If we come into the bottom of this, 382 lands on 9 cents, then we're basically you're not coming right to that channel that needs to, because like you come up to that level channel here would be something. Be good to see how far we get on this like first impulsive move up, because then we can actually try to determine off our pullback on the best case scenario and the worst case scenario. I think worst case scenario, you're looking at the golden pocket, which is the 618, and maybe we were to go up to say here to about 14 cents, then the golden pocket would put us, that might work actually, like in terms of what the idea I have here. But the thing is, really think 9 cents needs to be, I think if we go up above 9 cents, it wouldn't look right that we came back underneath 9 cents. Because we back tested it, support, but it ignored it here. Yeah, it's a hard one. Trying to predict the future. It's not easy. And see where they be. I mean, ideally we would. That's what we do. Realistically, get an impulsive move. Really want this to impulse up. For me, best case scenario is a crazy impulsive move right up this sense, right up to the bottom of the top of this, and then we can hold 15 cents. It's and look how amazing this is. Like, let's get rid of. If we go from low here, the all-time, to the all-time golden pocket is 9 cents. Yeah, how important 9 cents is. It's a really important level. You do that and the other way round, all fit. It's a 382. It says 382 10 cents. This is actually quite a compelling fib pull. Because if you take it from the high here, work it all the way down, and you've got these really key levels. We have to reverse all of these levels to get back up to 1 to 1. Here you see it says 5.5 cents, 10.6 cents. These are levels that stay up. We have to see how this plays. This is interesting. Just into my level. Set and then I hope you have a good day. See you tomorrow.